Welcome to the Deep Dive. We're here to really dig into the stories shaping finance and tech, cutting through that noise.
Getting right to what matters.
Exactly. And today, we've got a genuinely surprising twist in the crypto world.
Oh, yeah.
Yeah, we saw this big macroeconomic event send ripples, not just through traditional markets, which you'd expect, but it actually caused a pretty significant rally in Ether.
Wow. Okay. That is interesting.
Isn't it? Like, how does a speech from the Fed chair spark nearly 10% gain in Ether? It makes you wonder, what does this reaction tell us about how deeply intertwined Ether is becoming with the wider financial system?
It definitely feels like a key moment.
It really does. And we're here to unpack it for you.
Absolutely. And that's precisely our mission for this deep dive. We're going to connect some pretty fascinating dots here.
Okay.
We'll look at the Fed policy, sure, but also the technical market movements that were kind of already bubbling up.
That's the background.
Exactly. And then there's this massive surge in institutional investment, especially through those ETFs everyone's talking about.
Exchange-traded funds, yeah.
Right. And this isn't just about a quick price jump, though that definitely catches the eye.
For sure.
It's more about understanding this fundamental structural shift in demand for Ether and how the big traditional finance players are now, perceiving and actually integrating this asset. Our sources lay out some really clear data on these factors, tying it all together.
Okay, so let's dive in. Where do we start? Jackson Hole, right? The Fed chair's speech.
That's the catalyst, Jerome Powell at the Jackson Hole Economic Symposium.
Right, a very traditional setting for something that rocks the crypto world. His comments were seen as pretty dovish, weren't they? Hinting at maybe cutting rates in September?
Yeah, that was the main takeaway for the market. And historically, that kind of signal sparks a sharp reaction across risk assets.
Stocks, commodities.
And now, apparently, Ether, too. It's that sort of easy money idea getting markets excited.
So what exactly did Powell say? The nuances matter here, don't they?
They absolutely do. It's all about the phrasing with the Fed. He specifically mentioned a shifting policy stance and said the balance of risks may warrant adjusting policy. Now, to Fed watchers, that's, code, meaning they're seriously thinking about a pivot, moving away from being quite so restrictive or hawkish.
Got it.
And he backed that up. He talked about rising downside risks to employment and noted a softening labor supply in line with demand.
So seeing cracks in the economy, basically. Job market worries.
Precisely. He's saying, look, things might be slowing down enough that we need to maybe ease off the brakes a bit.
Which is a change, because for a while it felt like inflation was the only thing they cared about.
Exactly. And that's why his other points were interesting, too. He mentioned the Fed moving away from that flexible average inflation targeting framework.
Right. What did that mean again?
Well, basically, it used to let them allow inflation to run a bit hot sometimes, maybe to boost jobs. Moving away suggested maybe a stricter focus on just hitting the inflation target.
Okay.
But crucially, he paired this with the employment concerns. And he also warned that stable inflation expectations cannot be taken for granted, so they're adapting, but not, throwing caution to the wind on inflation.
So reading between the lines, less aggressive tightening, maybe even easing coming.
That's how the market read it. And like you said, that typically fuels rallies in riskier assets.
And boy, did Ether react. The sources show this explosive response, right? A 10% rally pushing ETH towards, $4,668?
Yeah, and it was fast.
That's what's wild. An hourly return of 7% right after the comments. In 1 hour.
Incredible speed. It really shows how tuned in the market was to these macro signals.
But was it just the Fed? Or was something else going on? Was the stage already set?
That is a really sharp question.
Yeah.
Because the data suggests, it wasn't only the Fed speech acting in a vacuum. The technicals for Ether were already looking pretty interesting. ETH had actually broken through the $4,350 resistance level just the day before, on Thursday.
And resistance is like a price ceiling it struggles to get past.
Exactly. And this particular level, $4,350, it had been tested 5 times earlier that week. Couldn't break it.
But then it did.
Then it did. And it wasn't just a quick poke above. The sources say it was a decisive close above that barrier. That confirmed what technical analysts call a short-term bullish break obstruction.
Like breaking through a wall and staying there.
Perfect analogy. It signals a real shift. And what's even more compelling, this bullish breakout happened right on the back of an inverse head and shoulders pattern.
Okay, sounds technical. What does that mean for us?
Think of it like a chart pattern that often signals a trend reversal, like from down to up. It suggests buyers were already stepping in more strongly, building steam before Powell even spoke.
Ah, so the market was like a coiled spring.
You got it. The bullish setup was already there. Powell's speech was just the perfect catalyst to set it off.
So near term, could Ether keep climbing? What are the charts suggesting now?
Well, with this momentum, the sources suggest ETH could definitely extend gains, maybe towards those recent highs above $4,800.
Okay, that's the immediate reaction, the trading aspect. But what about the bigger picture, the institutional money we keep hearing about? Is this just traders playing the Fed, or is something more foundational happening?
That's really where the story gets legs, I think, because Ether is clearly solidifying its role as a new favorite among institutions and corporate treasuries.
So TradFi traditional finance is really jumping in.
Big time. Look at the spot ETH ETF inflows, record-breaking numbers. July saw net inflows of, get this, $5.43 billion.
Oh, billion with a B.
Right. And then another $2.45 billion in August. You put that together, it's $7.88 billion in just 2 months.
That's huge.
The sources are calling it the strongest quarter of ETH ETF demand on record. It's not a trickle, it's a flood.
Okay, so all this money pouring into ETFs, what does that actually do to the supply of Ether that's out there for trading?
Great question. Let's look at the actual ETH held by these ETFs, the custodial holdings. Data from CryptoQuant shows these holdings hit 6.42 million ETH on August 21st.
And where was that before?
Just back on July 8th, it was 4.15 million ETH.
So wait, that's an increase of over 2 million ETH.
2.27 million ETH, to be precise, in just 6 weeks.
That's insane growth.
It's roughly 58% growth in those institutional holdings in that short window. The analysis calls it one of the most aggressive accumulation phases since ETH ETFs went live.
So they're not just testing the waters.
No, they're diving in, and they're holding it through these regulated channels, which tells you something about their conviction, right?
Yeah, absolutely.
Yeah.
Okay, so you have billions flowing in, millions of ETH getting locked up in these custodial vehicles. How does that change the market itself, the actual buying and selling?
Well, this leads us to what CryptoQuant calls a structural demand shock.
Structural demand shock. Okay.
Think about it. All that ETH going into ETFs is effectively removed from spot exchange liquidity.
Meaning less is available to buy and sell on regular exchanges.
Exactly. The pie of freely traded Ether gets smaller, and that means thinner order books.
Like less stock on the shelves.
Precisely. So if someone comes in with a decent-sized buy order, but there's less ETH readily available to buy...
The price moves more easily.
Right. Identically sized trades now exert greater impact on price action. It makes ETH potentially more volatile in the short term, more sensitive to big ETF moves like rebalancing or redemptions.
Okay, so potentially bigger swings.
Potentially. But there's a flip side. This sustained ETF demand places a persistent bid beneath the market.
Meaning continuous buying pressure.
Yes. It acts like a floor, supporting higher prices over time and actually helping to compress volatility in the longer run. So connecting it all, these huge inflows aren't just a number. They're fundamentally changing Ether's market structure, making it potentially more institutionalized, maybe less wild, but possibly higher priced.
That's a fascinating dynamic. It's like crypto growing up, in a way. And it's not just the ETFs, right? There's other evidence of this institutional pile-in. You mentioned analysts like Ted Pillows.
That's right. His work backs this up. He highlighted the growth in what we call Ether whales.
The big holders?
Yeah, addresses holding, say, over 10,000 ETH. The number of those addresses has grown by more than 200 just since July.
So alongside the broad ETF money, you've got these concentrated big bets too.
Exactly. It's not just diversified funds. It's also these large, possibly high-conviction players accumulating big stacks. It suggests belief in the long-term value. Seeing both grow at the same time is a pretty powerful signal.
So if you add it all up.
The grand total is pretty stunning. Between the ETF custodians and the strategic treasury companies, they now hold a combined 10.52 million ETH.
10.5 million Ether locked up by institutions.
Yeah, it really underscores the sheer scale of this institutional shift. And it definitely makes you wonder about supply for everyone else down the line, doesn't it?
Absolutely. So let's just recap this whole chain of events. It's quite a narrative.
It really is.
You start with the spark. Jerome Powell's dovish comments at Jackson Hole, getting risk assets excited.
Check.
But Ether wasn't just reacting blindly. Its technical setup was already looking bullish, breaking resistance, forming that inverse head and shoulders pattern. It was primed.
Primed and ready, yeah.
And then the fuel for the fire. These Absolutely unprecedented spot ETH ETF inflows, almost $8 billion in 2 months, pulling huge amounts of ETH off the market.
Plus the whales adding to their stacks.
Right. Plus the whale accumulation, all these pieces just seem to click together perfectly.
A confluence of factors leading to a really powerful move, and maybe, just maybe, signaling a bigger shift underway.
So for you listening, here's something to chew on, building on everything we've dug into today.
Yeah, think about this. You have this accelerating institutional adoption, clear as day in the ETF and whale data. You have a quantifiable chunk of ether supply being removed from daily trading, locked into these vehicles. And you have this evolving macro picture, maybe central banks getting a bit less aggressive.
Right.
So the question is, what could all this mean for ether's long-term stability? Are we seeing it mature, maybe becoming less volatile, acting more like a bridge between traditional finance and the decentralized world?
A really critical question.
Understanding these dynamics,
Yeah.
the macro, the technicals, the structural demand shifts is absolutely key if you want to stay informed in this rapidly changing space. And just our usual reminder, this deep dive is purely for informational purposes.
Definitely not investment advice.
Never investment advice, just analysis to help you connect the dots.